the thing that most people do, and the thing that causes the most problems that I've ever seen, is we simply don't save enough. Like, we don't save enough. And how do we save more? Well, there's three different pieces of this, right? You earn more, you spend less, and then you sort of think longer term. So realize that right now you're earning a certain amount, and people panic about that, and I can't do anything about it. Well, you're gonna earn more later, almost guaranteed, right? We are always becoming the next version of ourselves.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big. Jonathan DeYoe is a Lutheran seminarian turned Buddhist academic turned financial advisor. He's also the advisor of the Mindful Money and the host of the Mindful Money podcast. He has been investing for over 4 decades and helping others build wealth for the last 25 years. Jonathan, welcome to the show.
Thanks for having me, Sam.
Pleasure's mine. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
In 90 seconds or less. Where did I start? So I started off in Rapid City, South Dakota. I was raised pretty poor. And so I made a goal for myself to make money and to not have that problem, going up. So took a detour, started finance in college, took a detour, studied philosophy and comparative religion, ended up coming to California to be a Lutheran seminarian. The Lutheran school I had agreed to go to, and they had given me a scholarship. When I got here, they said, listen, we had a bad year last year. We don't have the scholarship money. So I went across the street to a Buddhist school, and they said, yeah, we have some money. So I ended up studying comparative religion from a Buddhist side. Was there for 2-3 years, realized that I really wanted to practice more than I wanted to be an academic. So I meditated every day since. And started off, right after I left at Dean Witter, which became Morgan Stanley Dean Witter. I was at 5 or 6 different Wall Street firms before I started my own firm in 2001. And so the last 20 years, I've been building that firm until last year when I merged it into EP Wealth. Wow. That's interesting. Tell me, in that financial planning practice, like how give me some color on what that was. I mean, to say financial planning can mean 10,000 different things to 10,000 different people. Yep. Yeah, it's a great question. I appreciate it more than you probably know. So I think most people that have that say financial planner mean investment advisor, and I actually mean financial planner. I don't think anybody has the ability to guess what's happening next. I don't think anybody that can control outcomes. I don't think anybody can predict anything. So given that, planning is the tool we use. And in fact, the 2 tools we think that are the most valuable are planning and education. So in my own personal pivot, I'm working with clients on their financial plans, and I go in depth on, all their cash flows, incomes, outflows, all their goals, what those cost, the probability of increased costs later on, everything, education. We go really, really, really deep in all aspects of their financial lives. And what that does is it gives us the ability to make better decisions in the now. And that's really what financial planning is. It isn't investment selection. It isn't market timing. And if you've got folks that are looking for better investment selection, better market timing, that's not here. And in fact, it's not anywhere, but it's especially not here.
That, I love the idea that what you mentioned there, differentiating between what is financial planning and what is just investment selection. Because those are 2 very different things. Getting someone to the point where they want to come to you and say, Jonathan, let's sit down and let's just pull the curtains back on everything and just dissect this piece by piece, has got to be the people that are willing to take the time to do that are few and far between, I would imagine. Is that a fair assumption?
Yeah, thankfully, there are many different brands of financial advisors, as you sort of alluded to. And so people can find the people that fit with them, and they're out there. And if you really want something, I don't believe it's possible that someone can select a better investment or time market any better than I can. But if you believe that someone can do that for you, then, I wish you the best of luck. I think that's a great thing.
Right. And I guess what I was getting at was that what you provide is an incredibly valuable service to people that take the time to do it.
Yeah.
What are the things that bring people to you to where they say, hey, Jonathan, I need your help?
Well, I don't know what the thing is that stimulates somebody to make a decision to ultimately call us. That's hard for me to guess. But because of my education in sort of philosophy and mindfulness training and meditation and different religious kinds of things. I think that whenever I'm on a show or when I'm being interviewed or whenever I write, that comes across the idea that, hey, there is a way to make better decisions. It's not the way that we're told all the time. Let's talk about the way that actually is helpful. And for some people, they go, oh, that makes a ton of sense. Let me talk to Jonathan. And when they do, then I think that's the stimulation right there.
Right. That's really cool. I like that answer there. Tell me, when you guys dig into someone's financial plan, or in this case, maybe the lack thereof, what are some of the common threads you see, the things you go, man, most people struggle with this and this is how they overcome it?
Yeah, I mean, it's a great question. I think that the thing that most people do, and the thing that causes the most problems that I've ever seen, is we simply don't save enough. Like, we don't save enough. And how do we save more? Well, there's three different pieces of this, right? You earn more, you spend less, and then you sort of think longer term. So realize that right now you're earning a certain amount, and people panic about that, and I can't do anything about it. Well, you're gonna earn more later, almost guaranteed, right? We are always becoming the next version of ourselves, and so we get raises, we switch jobs, we start a side gig, and so in terms of planning, you can think about all those kinds of things. And I just went through this process myself. I went back. I don't know if you've ever done this. I went back and looked at goals that I set 11 years ago, 10 years ago, and I kid you not, I beat the goals by 10. I had like 5 specific goals. Every single one of them I had beaten by like 5 or 10%, and I set them 10 years ago. I was 40 years old, and I was like, these are crazy goals. I'm going to really set the bar high, and boom, we nailed them. And so the fact that you put those things on paper, that you think about them, that you write them down, actually does create outcomes. You have to follow through. You've got to do the work. You got to take the time, all that kind of stuff. But if you write it down and you reflect on that on a regular basis, you'll get there, right? You'll get there. And I fully believe that. But that's the reminder is this is what you got to do. Let's go do it.
Right. And I think that goes into the title of your book, which is or the title of podcast or book. Which one is it? You wrote a book,
Both.
Yeah, it is a Mindful Money and Mindful Money podcast. There it is. That's the topic of your book is Mindful Money.
Yes.
Can you break down what that, other than just writing it down and saying, hey, this is where I want to go. What else does that mean to you? So
the second thing I would say, we don't save enough. The second thing is we invest without knowing what we're investing for. So mindfulness, this concept, what is mindfulness? The concept of mindfulness is sort of a non-judgmental awareness of the present moment. And right now in the present moment, we've had 2 quarters of kind of volatile markets after 9 years of just a wonderful upsides. So people are actually experiencing this now. And if you're a real estate investor, you haven't experienced this kind of volatility, this kind of interest rate rise since 2008, 2009. So if you're, this is kind of scary for a lot of folks.
For sure.
But the reality is this is a natural ebb and flow of markets. This happens. It's normal. It's normal in equity markets. It's actually normal in real estate markets as well. And the mindfulness piece is realizing, okay, there's this scary thing. Let's not judge the fear. Let's not make some kind of an assumption about what's going to happen next. What's on the ground? What can we do to make a difference? When you're thinking about somebody that has goals and dreams and things they want to accomplish, if they've never thought about the goals and dreams and things, they're behind, right? They don't know what they're targeting. But more important than not knowing what they're targeting is they don't know how to course correct. You got to know where you're going in order to know when you're not on the path. And so mindfulness is of the path. Not mindfulness is knowing where I'm going, knowing the decisions I need to make to get there, and then course correcting along the way, being non-judgmental about the environment, knowing what I need to do internally, right? And that's very tough to get to that. But when you work with people and you sit down with them, you do the full analysis of everything you want to accomplish. You say, here's the trade-offs that you need to make that happen. Here's the expected normal run-of-the-mill market volatility, run-of-the-mill downsides you're going to run into, and you have to just keep doing the stuff that we said you had to do while that stuff happens, because that's just normal. That's par for the course. That's what we can expect. And then they meet that when you're on the path, right? Mm-hmm. So you've made the plan, you've talked about the trade-offs, you've told them what to expect, and then that thing hits them, that smacks them in the face, and then they go, oh, we talked about this. And yeah, we'll talk about it right then again. And we'll talk about it every 6 months. We'll talk about it every year. We'll keep talking about it and talking about it. And then it hits them, and then they can work through it. And it's that constant message of, this is what we got to do. This is what we got to do. This is what we got to do, that enables people to do it when the time comes.
I love it. I love it. You said one of the mistakes that you see people making is that they don't save enough. Yeah. What does saving mean to you? How would you answer this? What does saving mean to you in an environment where we see the value of especially dollars just going away? I mean, what is that? I mean, inflation is just killing savers right now. How do you save? How do you mindfully save?
Yeah, well said. Well said. So saving is one step in a two-step process, right? Everyone has to have enough savings that is declining in value, that inflation is going to erode, no question about that, right? And we're talking a lot about inflation today, but inflation has always been a fact. It's been 1.82% for about 10 years, but it's always going to be coming. It's always around the corner. And when you're thinking about 60-year investing lives and 30-year retirements, you're going to face lots of inflation. So this isn't a special thing. This is something we should expect it. Okay. Right. So given that, I'm always recommending saving more, but saving is just the first step in that two-step process. Once you have your emergency fund, once you have enough sitting in cash, then you're investing it. You're seeking a place to put it that has the highest opportunity, right? And so that could be, and I know what you guys do, lots of real estate. I've done a lot of real estate in my life as well. I'm a huge fan of just public equity markets. I'm actually a huge fan of private enterprise as well. I invest in small businesses locally. When they run into trouble, I invest into small tech companies where I might know the CEO, or I might have a friend that's introduced me to the CEO or something like that. I love that stuff. I love equity. I love business. I also am a huge fan of real estate as a way to develop wealth.
I like that. So you're saying what we do first, get the emergency fund covered, get that covered, and the rest gets invested.
Totally.
Where do you see prime risk right now in investments? Be it in the public markets, be it in real estate, you see a lot of different stuff come across your desk. Is there anything right now that when you see it, you just get this internal gut check of like, oh boy?
I do. I'm not sure I'm going to win any popularity contest with this.
It's okay. We're not here for popularity contests. We're here for honest feedback.
Yeah. So I think, and this goes back every 2-3 years. There's something that comes across the pipe that is exciting to talk about.
Right.
And usually, while it's exciting to talk about, it's a really dumb idea to engage. Go back 20 years. I'm starting the business in the middle of the .com world. There's plenty of people that saying nothing but technology matters, nothing but connectivity matters. This is all that matters. That's all I'm going to invest in. And they did really astoundingly well, 96, 97, 98, 99. And in 2000, they lost 90% of their assets because everything chased one idea. So now it's in this last couple of years, there's been a lot of chasing going on. You've had SPACs, they're all destroyed. NFTs, they're pretty much destroyed. Crypto, I think crypto has a case. I'm not investing in the currency. I think there's a case long-term, not in the currency, but in the blockchain.
Right.
I wouldn't touch the currency myself. It's just, that's speculation. That's not investing. So for me, I like anything that's broadly diversified. I like to own lots of different stuff because I think the risk is in the concentration. The risk is engaging the exciting thing, getting too concentrated in the exciting thing when it's exciting. I love stuff that's like, okay, everybody hates this now. It's probably a pretty good investment, right? Remember, like Tesla was killing it. Ford was getting destroyed. 2022 comes, Tesla gets destroyed. Ford is killing it. That's a pretty good story. That's kind of what you can always anticipate.
I love your statement there that the risk is in the concentration. We're seeing that right now in the multifamily space. I don't know if you track anything in commercial real estate, specifically, but the capital pouring into multifamily has just caused cap rate compression at a pace that I just can't. It's unfathomable to me. And yes, I did buy some multifamily last year. It just made all the sense in the world. They were sweetheart deals and they're crushing it. But by and large, I just stepped out of it. I just said, man, this is, it just seems frothy.
Yeah, what is it? I think Buffett said, you buy the thing when it's I don't remember what it is,
Fearful
but
when others are greedy and greedy when others are fearful.
yeah, it's that. But if it's deer, if everyone wants it, you don't want that. And there's plenty in real estate, specifically in stocks, there's plenty of opportunity. Maybe it's parking lots now, maybe it's not single family. Maybe it's, there's so many different options of how you do it that don't buy the thing that everyone's chasing. And right now, like the big money is all chasing multifamily. You got, you've got, what is it? Blackstone, right? Yeah. Buying thousands and thousands of units. That drives up prices, makes the cash flow less good.
Right. Drives up prices. I mean, it's great. It's great for those of us, if we're exiting, it's a great time.
If you're an owner, it's a good time.
Yeah, it's a good time to sell. That's absolutely right. But no, I think that's really, really smart there when you say the risk is in the concentration. I mean, do people come to you and just send you, opportunities they have if they're a client of yours and say, "Hey, Jonathan, here's an idea, here's an opportunity to invest in something. What do you think?"
Yeah, I mean, it's rarer. I mean, the people that are, I wrote a book called Mindful Money. So the people that attracts first is people that aren't really interested in investing. Right. So they don't want to do this themselves. They want somebody to do it for them, with them, hold their hand through the process. And that's what I love to do. I love to actually walk people through capital markets because I love capital markets. It's a fun place for me. But occasionally I have a client who will come in and say, "Hey, I've got this idea, or, my buddy started this company in Silicon Valley. What do you think?" And they run the gamut from a real estate thing to a new meta platform to a new, so there's so many chip companies. There's so many different things that I run into. I've only made a couple of those direct investments myself because there's so much risk in that. I mean, it's like 98% chance that you lose every penny you put into it. Right. So again, concentrations are good. I like diversification. So I have a guy that does this 100% of his time. That's what he likes to do. And so I give him the money that I want to invest in private enterprise, and he invests that money because he invests in 60 in every fund. So that's fine. That's how I get diversification in that space. And those are out there. They're available. And I recommend those. And I think that's, in your world, that's like syndication, right? You get somebody that does a bunch of different things, and they pool money, and that enables more investments across a broader range of opportunity.
Yeah, especially when you start getting into syndications that are funds where we might pool 10 assets into a single fund.
Yep.
Yeah, that's absolutely right. Tell me about this. You mentioned early on that you were raised poor. There's oftentimes, I feel, that there are mindset shifts that you have to get over. Especially, I'm in your camp of growing up pretty much. Pretty on the poor side of things. And so I'll just speak. Maybe I'm projecting here. But
project away.
It took me a long time to really get out of the poverty mindset.
Oh, yeah.
It's like, oh man, this is where I come from. This is who I am. This is who I'll always be. This is the way. And my parents treated money fairly well. We just didn't have much of it. But still, there was a lot of just getting over some of those things. Tell me how can you contrast that upbringing and your book on mindful money and being mindful of your money? How do those two coincide?
So there's actually a third point in there. We talked about it just briefly before we started. So I wrote a book, and there's 3 parts to the book. The first part of the book is all the illusions you can ignore. The middle part is the stuff that can make you, that leads to well-being, happiness, contentment, whatever that word is you want to use. And then the third part of the book is a plan to get there. So I've written a book that talks about, health, relationships, gratitude, generosity, all these things that we know lead to happiness, right? So I know the stuff. I've read the research, I've read the papers, all that kind of stuff. It wasn't until last year when my brother died that it really hit me that I wasn't doing it. Like, I wrote the book, I understand, but I am still, to this day, I have a poverty mindset to this day. And it's not that it holds me the way it did when I was younger.
Sure.
But it pops up. Like and you go, oh, there it is. Like, that's the thing that gets me. And I find myself worrying a lot about it all going away. So that's that, I built the thing, I merged the thing in a larger company. I'm building more content. I'm writing, I'm teaching, I'm doing all the stuff I love to do. And yet there's this thing that I'm afraid someone's going to take it all away. It's going to take it away. So when my brother died, it really brought home, something about the way he lived his life. And it was, he didn't mind being late to the movie. He didn't mind making you wait. He didn't stress all the things that I stress constantly. And so I'm learning to be a little bit more relaxed, and, it ebbs and flows. Like I'm trying my best, and, but that, man, it grips you and it shows up in places you don't expect it.
Yeah, and I think that's that it's an interesting thing. I probably didn't recognize even in myself or know that it existed. Gosh, until probably, I don't even know, 5-7 years ago. And it's like,
Yep.
oh, wait, there you are. Like,
Yeah,
I have a poverty mindset, and it's recognizing it. And I think it is a journey. Everybody has their own journey, but it's certainly an interesting journey to just explore. And so I was just curious how that worked out. One last question here for you before we sign off. Really curious about your business. I know we talked about this a little bit off air, but I think it's important for those who are scaling their business and thinking about ways to scale, and also scaling in a mindful way. We're going to keep playing with the mindful theme here. But you took your business and merged it with another company, really so you could focus on the thing that you enjoy the most. Is that right?
Yeah, that's absolutely right. Yeah, I 21 years of building a practice. And I think we talked about this beforehand. When my brother died, we had plans that beginning of this year. So he died middle of last year, June of 2021. Wow. He was going to join me first quarter of 2022 and be my COO, CEO. He was technology genius. He was an operations guy. He had his MBA, and I'm much better face-to-face with a client. And so I wanted to do none of the business management, and I wanted him to come on and do that kind of stuff. And we've been planning it. We actually started a company in 2006 that we actually shuttered in 2008. So we've been thinking about how to do this for a long time. So when he died, everything changes very quickly. And so I was like, okay, I know I don't want to do this. I know I don't want to pick the next, technology tool we use. I don't know. I know I don't want to do, there's so many things we had to think about in terms of our technology stack, and I didn't want to do that. So I had actually recently talked 3 years ago. I had talked to this firm, EP Wealth, and I'd gone down the road with them, and I chatted with them pretty deeply. And I decided at that point, I'm just going to grow this thing. I'm going to bring my brother on. We're going to do this together. We've always meant to do this. And so I went back to them, and I went back to like 15 or 20 other companies, and I hired an M&A firm and said, this is what my firm is doing. This is what we believe in. This is our thought process. This is our investment process. This is our planning process. Find a firm that's a good match. And EP, the people I talked to 3 years ago ended up to be the best match for me. And I merged it in there. And so now I get to do the two things I want to do. We're 6 months in, so there's still some overlap. There's still some things I have to take care of, right? But I see a point in the future where I get to write, and I get to do my podcast, and I get to visit with you on your podcast, and I get to sit face to face with my clients, and I don't have to worry about any other stuff. And that's, for me, that's the dream. That's what I want to do. And it took 20 something years to get here. Right. And I think this year I would have been there either way. I would much have preferred doing this with Dave. But this is the world we live in now.
It is. Yeah. And that's, I'm really sorry to hear that about your brother. I can't imagine that. I've got 4 of my own, and that had to be absolutely devastating. So thanks for sharing that with us. Yeah. But at the same time, I think it is, scaling your business, and that's the title of our podcast, is how to scale commercial real estate. And the number of people that come on this show, and not number of them, but I get kind of 2 camps that come on. One person's going to say, "Hey, we're going gangbusters, and we're going to have 500 employees and own billions of dollars in real estate," and that may be exactly what the life they want to create. And then there's other people that come on and say, "Look, you know what? I make $250,000 a year passively, and I'm enjoying the rest of whatever it is until I decide to go back to work and do something differently. And I'm happy as a pig in slop." So it's like, it's just very interesting. So I think mindfully scaling and figuring out and building your business around the way you want it is a great example that you've set for us here by, partnering up and merging with another firm. So you get to do exactly what you love. So yeah, that's,
and I think I told you this in that little email exchange we had before we sat down, but, the key to that process is really understanding what you want. Yeah. Right. And that's that goals, vision, purpose kind of a thing. And I think the course that we're going to put in the show notes is our vision course. And so we have a course that's free. Everyone can take it. And it starts with like, what are my values? What's my purpose? And then I can build goals on top of values and purpose. And that's, so many people never even go through that process. And I try to go through that process every single year. I'm behind this year, but I'll definitely pick it up again next year. But that's that's huge. Know what's important to you, know what your purpose is, know why you're here, and then build goals on top of those two things.
I love it. Jonathan, if our listeners want to get in touch with you or learn more about you or take the free course, what is the best way to do that?
So mindful.money is the place to find all the social media and find the website and find the courses. We have a lot of different courses that are financial education, including a financial planning course that's built basically right on the chassis of my book and all the exercises in the book. So people can definitely check that out. I'm hoping that we can put in the show notes the link to the free course.
Absolutely. Yeah, we'll do that. We'll put that link there in the show notes. Jonathan, thank you so much for coming on the show today. I do appreciate it. Thank you so much. Have a great rest of your day.
Thanks, Sam.